Well, let's work some problems in adjusting journal entries from Chapter 4. This is asking for us the accounting effects for our company, which is Sky Blue Corporation. We collected $2,400 rent for the period October 1st. This should be October 1st through December 31st. And we originally credited to unearned revenue on October 1st. Now this is quite proper for us to do this because we haven't done any provided any rent as of that date. So initially you record it as an unearned, and then as time passes on October 31st at the end of the month, you would need to record 1/3 of that because it's for October, November, and December, and you would record it as revenue because the time has passed, and take it out of your unearned revenue. So initially it would have been collected as rent for the period October 1st through December 31st. It would have been a cash debit, and it would have been an unearned revenue credit. So on October 31st, liabilities need to go down and rent revenue needs to be recorded. Okay, in transaction B, we initially paid $1,200 for a 2-year insurance premium. This is something we are paying for insurance in some aspect of our company. We paid, so we would have initially credited cash and we would have debited or prepaid for $1,200. You have to be a little careful with this one because it's $1,200 for 2 years, which means it's $600 for 1 year. If 1 month is passed, it would be $50 in insurance expense. And then the last one is talking about machinery that was purchased for $48,000 in October, and we are recording depreciation. As I said before, it's not really a deferral type entry because we're not really talking about the difference between a cash flow and when we record depreciation. We're really talking about expensing off of this asset. And so we are taking it to our contra account, and we are also recording depreciation expense. When you look at this and you use the accounting equation effects, what you really need to think about here is on this stockholders' equity side in the transactions. In the first one, rent revenue, it says plus $800 for stockholders' equity. I want you to start thinking about this stockholders' equity as a retained earnings. So retained earnings would be going up by $800 in the first one. Retained earnings would be going down by $50 in the second one, and retained earnings would be going down by $400 in the last one. Now, when we do the journal entries, you have to remember then that expenses are recorded as debits and revenues recorded as credits. So when you're up here in the first one, you're taking or reducing this liability and recording then the revenue. In the second one and the third one, you are reducing an asset and you are recording the expense. So B and C are the expensing of assets transactions. In C, you notice they have a plus XA. What they're saying is the contra account is going up for that, which means the asset account is going down. Now, prepare the journal entries to record the initial transaction and then the adjustment also. They paid $4,000 to rent an arena, but they're not renting the arena this month. They're renting the arena in the next 2 months, so it's a prepaid. And then at the end of the first month, you would remove that prepaid rent. You would remove half of it, or $2,000, and you record rent expense. In the end of November, they would do the same journal entry to remove the prepaid rent. Superstage receives $16,000 for season tickets to a theater event that will be held twice, October 31st and November 30th. So there's going to be 2 shows. When they receive the $16,000, they have done nothing. They have just sold tickets. They have to do some work to be able to record it as revenue, and they will do work when they held the events. So the first event's held, and in the end of October they can record half of it, and then when the next month passes they can record the other half. Risky Ventures paid $3,000 on September 30th for insurance coverage for 3 months. Well, 1/3 of that, one of those months passes, they record it as expense and remove their prepaid. Magnificent Machines received $12,000 for subscriptions to be published and distributed in the next year, January through December 2016. When they receive the $12,000, they have done nothing, and then as time passes, they are going to get to record it as revenue. The thing we have to think about in this one is whether it's appropriate to do this. Is it appropriate to say 1/12 each month? With subscriptions it is. Sometimes when you have venues, when you have a production, it may be that more tickets are sold for one event than another. Then we would probably need to look at how many tickets were sold for each and the amount of revenue that should be proportioned between the time between those two events. In this case, we're going to assume that all the people who purchased these magazine subscriptions will be receiving the same magazines, January through December. Walker Window paid $1,200 in cash for supplies. 200 of these supplies were used up. In this one, you have to be very careful about the wording. So the first part of it, by the way, this should not be December 30th. It should be December 3rd. Yes, December 30th is fine here. There's another one that has December 30th and December 31st. The dates are wrong. This one's fine. Paid $1,200 cash for supplies on December 30th. On January 31st, 200 of the supplies had been used up, so the expense should be the $200. Now, if instead of saying that 200 of these supplies had been used up, we said there was 1,000 of these supplies remaining, it would have meant the same thing. We would have done the same journal entry. So you have to think about it, read very carefully here. I think that in our PowerPoints previously, we talked about how much supplies were on hand. In this case, they could have said $1,000 of the supplies were on hand. Then we would have done the same journal entry. $1,000 of the supplies on hand or 200 used up in this case would mean the same thing. Oh, this one, Indoor Raceway, receives $3,000 for 3 races. Now one race is in January and the other 2 are in March. So 1/3 will be in January and 2/3 will then be in March. So there's going to be a delay. So unearned revenue first gets recorded of $3,000. In January 31st we will report 1/3 of it. In February, you would record none because there are no races being held. And then in March, you would have the remaining 2/3 or $2,000 recorded as service revenue and unearned revenue. At December 31st, the unadjusted trial reports prepaid insurance of $7,200. The insurance was purchased July 1st for 24 months. Prepare the entry on December 31st. In separate T accounts for each account, enter the unadjusted balance, posting the adjusted journal entry, and report the adjusted balance. All right. Well, if it's $7,200 for a period of 24 months or 2 years, 7,200 divided by 24 is the amount which would be for each month. Now, how many months do we need to take off of our prepaid insurance? July, August, September, October, November, December, 6 months. So 6/24 will be used up of the 7,200. And when we do this transaction, then we will end up with a prepaid insurance balance of $5,400. The 5,400 should represent the remaining 18 out of 24 months that are not used as of December 31st. So the 5,400 represents 7,200 minus 1,800, which is used up, or 5,400 for the remaining time period until they use up their insurance.